what does the latest earnings report from UPS reveal about the current state of the economy? While the global supply chains are catching up with the times, the slowdown in consumer spending might be a cause for concern. In this video, we're going to take a closer look at what the results mean and how they might affect your investments. Let's get into it. So we're saying the recent results for UPS were lackluster. Thomas, if you would, can you dive a little bit deeper into that for us? What were the main factors causing this outcome, and why did the company issue weak guidance?
Right, Lacey. So the main factor affecting this quarter's report is volume. The company has been raising prices and working on efficiency for over a year, but now volume is impacting and offsetting those price increases, and that's why they gave weak guidance. And the worst part about the guidance is that it seems like volume declines and may be accelerating into the second half of the year.
Yeah, Lacey, I don't remember what company it was that we were talking about when I said, earnings reports are kind of like progress reports that children get in school. And they're always lagging indicators. They're always telling you what happened in the past. They don't necessarily tell you what happened in the future. And in the case of UPS, yes, they reported reasonably good earnings, but as Thomas was saying, there was already some stuff under the surface that you could look at and say wasn't really good about those earnings, and now they're offering guidance that's even saying they're expecting a further slowdown. So this is a significant as earnings reports goes, this one's pretty significant.
Right, Lacey.
Right.
Like we've talked about before, though, the market is priced on the expectation for future earnings. And right now, the expectations for UPS future earnings are highly questionable. And so that's having a negative impact on the price.
So we're talking about the world's largest package delivery company here. If UPS slows down, isn't that a big red flag for the economy going forward?
It is. This is symptomatic of a much larger issue, and that is a slowdown in consumer demand. Consumer demand drives our economy, and when it slows, the economy slows. It's just the only way to put it. We're facing an economic slowdown driven by the consumer.
I agree with Thomas. The GDP, the first read on second quarter GDP just came out, or first quarter GDP just came out this morning, showed exactly that. It showed that the economy is clearly slowing. This is going to start sounding like my greatest hits album, Lacey, because again, I don't remember, but I've said it before about some other company that, the consumer's not stupid. And, the reality is a company like UPS, for the majority of us, the packages that we get from UPS are because of our discretionary purchases. And when consumers are looking at their budget and they're taking that little red pen through it and saying, what are the things we've got to cut? It's the discretionary purchases that are going to get cut first.
All right, so it seems like a negative feedback loops are forming in the current economic climate, but what are they and how are they impacting the economy? Thomas, in your recent MarketBeat article, I know you wrote about how the Packaging Corporation of America's weak results are correlated with UPS's results, but what does that indicate about the impact of consumer spending on the economy, and how are companies responding to this trend?
Right, so negative feedback loops, I believe, were first described by George Soros. And basically what that is when negative news, negative data comes out, it can lead to more negative data. One example is during the pandemic, when the price of gasoline started to rise. That's an inflationary cross throughout an inflationary pressure throughout the system. So at first, everybody has to pay for higher gas prices. And then they pass that cost on to the next person down the line. But they're also having that cost passed on to them by people up the chain from themselves. So not only were businesses dealing with higher gas prices, they were also dealing with the higher gas prices of other businesses. And that had to work its way through the system. It's taken it more than 2 years to happen. We're still dealing with it, negative feedback loops. So with PKG and UPS, they're both in business of boxes. UPS delivers boxes, PKG makes boxes. They both issued weak reports, gave weak guidance. They're both citing a slowdown in consumer demand that may be accelerating. You have to extrapolate that to all the people that need boxes. All the manufacturers need less boxes because there's less demand. That's throughout the system. So we're really facing a systemic slowdown that could lead to a much bigger recession than anybody really anticipates. Speaking about UPS, what they might do is to cut some labor or to cut some spending. And what is that going to do? It's going to weaken the consumer because there's going to be less people working. It's going to weaken the economy because they're going to be putting less of their own dollars back into it. And that's going to affect their own business. So another negative feedback loop.
So what is the outlook for UPS's stock price in the near future? What factors are likely to influence that? And do investors need to be concerned about the company's performance?
Well, be concerned, yes, because it's having an impact on the stock price now. The stock price is absolutely imploding because of the outlook for earnings, but I believe it's range bound. It's heading down to a critical support level, and it will probably bounce from that level because, believe it or not, now that the price has started to fall, the stock has started to get some upgrades and some positive attention. That's about the value. UPS is a well-established blue chip company that is not going anywhere. It pays a healthy dividend. It's working to reposition itself. Eventually, the economy will rebound, revenue will rebound, earnings will rebound. And between then and now, the company will continue to pay its dividend, and that will help support the stock price.
All right, Thomas, I'm going to turn our viewers to your recent article on MarketBeat that discusses UPS and some of the points we may have brushed on today. I'll go ahead and get that link down below, but is there anything else either of you want to leave us with today?
Well, I'll pick up on something that Thomas just was talking about with UPS specifically, but the market in general. Whenever there's a news that comes out with UPS, it can create a lot of anxiety among investors with what's going to happen in the market. Do I get out of the market? What do I do? And I can understand that because there's been this real I guess I'd call it a tug of war going on right now between the Bulls and the Bears. It's been going on for quite a while, and I think it's going to continue to go on for a while. And so you have to think maybe a little bit differently if you're an investor in this market. I think you probably have to start, even if you're a person who's more inclined to long-term holding on to a stock, as I am. I think you have to start thinking a little bit more like a trader in this market, and you have to start picking your spots. There's still quality stocks, but you have to pick and choose when you're looking to buy those stocks. And I know that we've got a lot of really good information on MarketBeat. Thomas, for one, does a really good job in his articles of talking to investors about where the price points are that you might want to look at buying in. That's what I think investors need to be looking at right now. It's not about getting out of stocks right now, but it's about picking their spots and being opportunistic, because there are opportunities out there. I like to be an optimist, and I think that, like Thomas said, the economy is going to turn around. And when it does turn around, a company like UPS is going to be leading that charge. So, right now is just a time for investors. Look for the quality, buy the best, forget the rest, and hang in there.
Right. That's a great note to end on. Great motto for us.
If I could expand for just a minute, Lacey, sorry, I had a thought. But talking about, there's opportunities out there. You kind of got to pick your players and pick your timing. In a general sense, I see the market, the broad market, as being at a bottom. I don't think that we're going to go much lower than where we have been. But within that, there are good and bad opportunities. There's high valuations and low valuations. There's people that are growing, people that aren't growing. Margins are widening, margins aren't widening, dividends, no dividends. And all of that activity is going to keep the market moving sideways. So some stocks are going to move up while they're cheap, and they'll hit a peak and they'll sell off. And the same thing will happen to other stocks in different kind of patterns, depending on the sector. And that's going to keep the market range bound probably for, I don't know, I think for a while, possibly for a couple of years.
I agree with that.
Thank you both so much for joining me on this UPS discussion today, and we'll talk to you soon.
See you next week.
Thank you, Lacey.